Morning everyone, Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, June 5th. Well, we ended the day yesterday, firmer grains and kind of mixed in the oilseeds. I still think it's a reflection of the fact that the Commitment of Trade report, I think, pretty much cleaned up the spec trade as far as the managed money goes for the corn and the wheat, but we're still a little bit top heavy for the meal and the soybeans, while the trade is actually getting shorter, the soybean oil. And thus a little bit of the weight in the bean market and the meal market if we are seemingly kind of liquidating markets, be it the outside markets and or right now no immediate weather threats. The volume in yesterday's trade was of the lighter variety. What we're seemingly seeing in the markets right now is what's going on with the index rolls, that being the index rolls either taking their positions from July into July 13 and or in the July corn and or beans and or wheat into the December contracts for corn and wheat and into the November contracts for beans. So that's ongoing right now. The trading volume was lower yesterday. And the other feature perhaps as far as volume goes is we had a little bit of a bounce in open interest yesterday to the tune of around 1,000 to 5,000 contracts between the wheat, corn, beans, meal, and oil. So perhaps that was a little bit of a reflection of a start of a new week, almost the start of a new month, and one of these what-ifs as we work our way closer to the weather time slot for the corn, soybeans in particular. We had our ratings out yesterday. Our first ratings came out for beans. They were 65% good, excellent. The trade was looking for a number of 65 to 70. No major threats, but on the lower end, and we got a little bit of a bounce in the bean market trade last night. Beans are up roughly in the neighborhood of around 10 cents in the old crop, around 5 cents in the new crop as we speak right now. The corn crop ratings were unchanged for the week at 72% good, excellent. They were looking for a slight decline, and that kind of limited perhaps some of the buying enthusiasm in the overnight trade. We're up in the neighborhood of around 1 to 2 cents right now. Wheat ratings were down again as far as the winter wheat goes. Winter wheat harvest is moving along. We're 20% done. Wheat prices are mixed as we speak right now, up 1, down 1. And however, we are still going good with a hard red spring crop. We're still doing good with our other crops, barley, sorghum, oats, as far as the good, excellent categories go. So overall, no major threats at this particular time as we move forward into the more important time slot, like I say, June, July, and August. Weather forecasts still seem mixed. Over the short term, it still seems like we're kind of more or less cool and dry. And then as we look at more of the extended, it's going to turn a little bit warmer and wetter as far as the forecasts go. And as far as what I've read this morning, it seems like we might even be a little bit wetter in the extended forecast than we were yesterday. Having said that, it seems like we've been kind of setting up somewhat of a range as we work our way into this growing season for no beans between $12.50 and $13.50 and roughly $5 and $5.50 in the December corn. We're kind of in the middle of it for corn at $5.25, but maybe at the lower end of it for beans. But I think again, once again, that's a reflection of this liquidation that we've been seeing in the soybean market being a little bit more top heavy than the corn in or the wheat, while bean markets may be dragging a little bit at its lower levels at this time. But obviously anything can change as we work our way forward if we get into any weather threats. But like I say, the overnight strength that we've seen may run into a little bit of vulnerability if the middays do indeed show this increase of rains in the extended forecast. One other thing I want to point out that came out this morning was the fact that Brazil left their bean, this being their government, left their bean crop unchanged roughly from a month ago at 66 million tons, but they went and raised their corn crop from 65 to a record 67 million tons. This has been a little bit of a drain on corn prices here over the short term as South American basis levels have been cheaper than us and business has been going to them. So that's been a little bit of a thorn in the side for corn business as opposed to beans, where with the short South American bean crop, we've been picking up bean business that otherwise has been going there, but conversely, the opposite for the corn, particularly when once again, we just found another 2 million tons as far as what their government says. One other point, softwood wheat prices, which saw a sharp rally a week ago or over the past couple weeks, getting shorts out, has retraced. And I'd have to say it's made itself competitive again versus the corn. It's also probably perhaps put itself competitive against other origins. I guess we'll find out if anybody really wants it from us as far as it being now price competitive. Once again, these are opinions of mine, not ADM or ADMIS. Thank you.